Bitcoin is currently trading at $62,000. We've been playing out a little bit of a pullback in the very, very short term, which is exactly what we expected. And in today's show, we're going to be discussing why Bitcoin tends to go parabolic very, very soon following the signal, and how long you could expect before that actually does start to take place. So without further ado, smash the like button, hit the bell notification, and definitely subscribe to the channel. And let's get straight into the show. You can see on the hourly, only a few of the coins are starting to turn green. Early on this morning, it was a sea of red across the board. On the daily, we're still looking completely red. On the weekly, we are holding up green. What about the monthly? Most of the coins are still red in the top 100 on the monthly time frame. So we have a lot to discuss in today's show. So sit back, relax, smash the like button, and we will get into the alpha as quick as possible. I'm going to try and be very, very precise in the show and very, very quick. And I need you to focus on the various different time frames, because some time frames are going to be bearish, other time frames are going to be neutral, and then the high time frame still remains very, very bullish. So it's very, very important that you understand the way all these different moving parts connect into one another, so that you at home can deploy into the market at the exact right time. And I'm going to show you why that right time may be over the course of the next 14 days. So let's continue. You got big buyers which are still allocating into the market. It is the mystery wallet, Mr. 100, which bought all of the Bitcoin that was mined yesterday, and that was 502 Bitcoin buy orders. Most days they've been buying 100, but we've noticed the trend has been that on some of the days that are slightly more towards the downside, you're seeing much bigger buys. Now, many people speculate that this is a nation state which has been buying Bitcoin, and that will come out later on, probably towards the top of the bull market. Now, what is the one signal that tends to lead to major inflows in markets and major upward price action? Oftentimes, prices tend to go parabolic, and that is the M2 money supply, which is showing that the money supply is, of course, expanding, and there's more liquidity available to deploy into the markets. And for the first time, we're starting to see the histogram tick on up towards the upside, crossing over that zero line. So think of this like a MACD, a moving average convergence divergence chart, just the same way that you would within crypto. Usually, of course, when it's downtrending, then we're in quantitative tightening, right? And now we're starting to move ever so slowly towards quantitative easing. But when this takes place, they usually use a lot of confusing jargon, as opposed to just coming out and saying, hey guys, we're turning on the taps, it's quantitative easing time to max bid. It never goes quite like that. Usually they wrap the terminology up in very, very confusing phrases, and it's never called the same thing. Each cycle, they wrap it up into a different sort of program. So now we already have received word from the Fed that probably from June is where they're going to drastically start to ease on the quantitative tightening side, which is obviously bringing the liquidity out of the market and moving this towards the downside. And now you can see the market, there's always insiders that start to front run that idea, and consequently the M2 money supply is starting to go up. Here's the Fed balance sheet. So of course, we went through the pandemic period where they printed trillions of dollars, and ultimately the economy expanded massively, and that's why we had that insane bull run in 2020 from the COVID lows in March, where Bitcoin traded down to, I think it was about $3,800-ish, somewhere around there, and rallied from that point onwards all the way up to $69,000 with one of the most mammoth moves we've ever seen. We had the DeFi summer where all those DeFi protocols went completely parabolic, pulling 100 to 500x gains. And ultimately, we went through the so-called raging inflation period now, where they started to tighten, and that has brought the Fed balance sheet down to the lowest levels since last seen in January of 2021, whereas ultimately where some of the rally was initiated, right? So now that we're at that period, are we ever going to get down to these lower regions? Probably not. They're probably going to print money long before then, and this balance sheet will continue to expand over time. So all you need to do is look at this chart we brought up before. This is where we're tracking in line with it based on the previous times that we brought it up. The current period will be known as quantitative easing disguised as quantitative tightening, right? So they're going to still say we're in quantitative tightening, but really it's easing, and it'll be known as the age of truth for the masses. As you can see over here, This is your global liquidity, and prices tend to track alongside that global liquidity. Of course, this was your absolute top of the cycle. As that liquidity started to crunch down, we put in the major cycle top in 2021, and now the liquidity is starting to expand towards the upside once again. Therefore, macro, you're still looking for a much bigger play over here and continuation of the bull market. And you can also see over here, USD stablecoin supply continues to trend towards the upside, showing that we have our own version of quantitative easing within the crypto market, where we have new money coming in, new capital in the form of Tether, right? Tether printing. Every time Tether print massive amounts, then you tend to see this go up. We are watching also with the rest of the liquidity over here in the major central banks. So far, pretty neutral. Only a couple of them have started to expand. The rest of them are more or less in the same place. But we expect that it will track in alignment with the global liquidity, right? So stock market, big move up, holding above the key levels on all the major markets. So S&P 500 on the top left, the NASDAQ on the top right, bottom right over here, Dow Jones. And then we have Coinbase, which is coming down ever so slightly, obviously trading in alignment with mostly what you're seeing in crypto, right? So Coinbase, obviously, as a crypto stock. Now, this at least gives a little bit of hope that as long as the stock market can hold up above this level and bulls can defend the $60,000 range lows, then there is a possibility that maybe there will be a higher low in the making on a macro scale, and we can look for much higher prices. So are we going to get into a whole lot of things over here in just a moment? So stay tuned until the end. We'll get into the lower timeframes in a bit. That is your high timeframe macro analysis over there. And I think this was a really, really good tweet looking at the difference between the supply and the demand and how prices move in accordance. Now, when it comes to assessing, obviously we have the halving cycle, right? The halving cycle has taken place. So that means that there's going to be supposedly less supply. Now we're just waiting for the demand side to kick in. Based on less supply, we're looking for what are the signs and symptoms of more demand coming into the market. Well, some of the signs and symptoms would be this, right? The M2 money supply going back up. That shows there's more money that's available. And the other thing that you want to look at is you can look at things like this, right? You can look into different types of demands coming from various market participants. So traders will look at traders at the token trading volume, which we know the token trading volume overall has been downtrending. Yesterday's show outlined how the open interest on a 3-month scale has reset back to where the October lows were, which just by the way, in the stock market, the October lows or October was at least where you did see the major lows within the market. So we can go back here. There it is. Here's October. This is the lows. If you just focus on the cursor over here, let's quickly grab the tool. This is your lows, right? Let's just try that again. There we go. This is your lows. That's your October lows for the stock market. And look at what happened next. Now the open interest, because crypto trades very, very similar to what the stock market is doing. If the stock market goes up, crypto goes up more. If the stock market goes down, crypto goes down more. Now, one thing that traders can see over here is the token trading volume has, of course, come all the way back down, right? There's been a diminishing amount, or the volume has been diminishing over time. And usually that's very, very healthy. It resets the open interest. The frothy market participants disappear. We don't see them. They leave the space, right? Investors over here, if you look at the token holders or growth and stake token growth, that's another way that you can look at those metrics to see how many of these participants are staking their tokens. Is it increasing or decreasing? You can look at the daily active users and the fees. We know on protocols, especially on the Solana ecosystem, like on if you look at the different wallets over there, and if you look at Jupiter, where they've of course been trading, those have been hitting new highs on a daily basis, right? New active users constantly coming, increase in fees. That shows there's activity taking place over there. That's a sign and symptom. So you want to see all these metrics increasing. User deposits, you can look at things like DeFi Llama. What is the total value locked on the various different protocols that you're looking at? Is that metric expanding or contracting? This should move in unison and in alignment with what we're seeing over here in terms of of course, over here, the M2 money supply. As the M2 money supply expands, you should see the total value locked and the DeFi Llama metrics also increasing towards the upside. So social media sentiments, mentions, engagements, we'll look at that as well in today's show. You'll see they've come down back to those bear market levels. Views across YouTube have dropped. If you want to bring your retail friends and family back, smash the like button, guys. That's one way to bring the social engagement back. YouTube works as an algorithm that helps our show. It helps to bring the message to the masses so that they don't enter at the wrong times, right? I mean, I don't know. I care about people. You know, I don't want people to be entering into the markets all the way at all-time highs, but naturally, this is what tends to take place. Unfortunately, the masses leave when things get a little bit boring, when we start to chop around, and they only come back when it's exciting. That's the wrong time. You should be looking to sell into the excitement and accumulate into the boring time. So with that being said, here's our Bitcoin long, which we took on Prime XBT. We did shave a little bit of profits over there, but we're still up 24% on the rest of the position. It's playing out pretty much exactly in accordance with what we were looking at. This is the 4-hour time frame. You can see, of course, lower highs, and ultimately this was the last lower low. So the expectation would be that you're probably going to fill some of this. You have a little bit of a fair value gap, which I've actually only just spotted right now live on the show. So I'm going to mark that level out. Over here, you have a little bit of a fair value gap. I think high probability that you're going to see Bitcoin trade back into the zone, which is just marginally above 60,000 or above $59,900. Rounded up, we should see Bitcoin trading back between $60,000 and $61,500. That will tag the fair value gap, and that's ultimately where you see prices start to get moving again. For those of you who are like, what the hell is a fair value gap? A fair value gap is simply just an inefficiency in the market. When you have a big inefficient candle, means price action moves up or down very, very quickly. Oftentimes, the market wants to bring back the price into that level over there to make it a more efficient market, right? Which means you'll see something like that, and that will be a strong bidding area. So I think now's not the time to get overly bearish as prices pull back. I'm going to show you a couple of reasons why there might still be a pullback into the zone, but this is where you need to observe very, very carefully what are bulls doing. Are they defending that $60,000 level? If the answer is yes, and they're defending that $60,000 level, this is where you'll see the medium time frame, or the shorter and medium time frame, start to merge into the longer term time frame, right? So bulls need to survive for exactly 14 days from right now, and if they can do that, I think you have a macro high or low in the making, and we can look at continuation, and potentially that parabola may still be intact. I'll show you why I say 14 days. For those of you who have been around for a long period of time and you join the Discord live sessions, you know exactly what I'm about to talk about. Okay, so let's continue. By the way, if you do want to trade on Prime XBT, you have access to crypto, stocks, commodities, forex pairs. Everything is on over here. If you go to the global markets, you got all the different pairs over here on Prime XBT. Just go through into the link in the description below over here, and you will see, where is it? Let's just go down to the bottom. Where's Prime XBT? Here you go. There's Prime XBT. Claim your share of up to $7,000 in sign-up bonuses. There you can trade the S&P 500. If you are looking to diversify your trading, you're somebody that wants to not be fully crypto-centric, this is the place to do it. This is where I mostly take my trades on Forex and S&P 500. Just claim your $7,000 sign-up bonus, or you can get 25% discount on commissions. It's your choice. You select which one you want over there. Remember, it's up to $7,000. It depends on how much you deposit. All right. Okay, let's go into this. So why is 60K so significant? Now, I know this is a bit repetitive because we've mentioned it a few times. At the end of the day, we're still in an uptrend on the weekly time frame, printing higher highs and higher lows. We are above the key range level over here, the pink zone, which is very, very significant. That's coming in at $59,000. We wicked perfectly into the 21 exponential moving average, bouncing from the exact cent of where it hit it, which is absolutely beautiful and what I love to see. And then I spoke about filling 50% of this wick over here, which is based on, you can see I measured it out as per the Fibonacci tool over here. Let's see if we can make it any bigger. I can't make this any bigger. Wait, there we go. Lines. There we go. Make that nice and big. Let's make it yellow. You can see it in yellow. There we go. Perfect. So there it is. There's the yellow marker. What price level does that come in at? Well, let's see if I just quickly go back over here. The exact level that it comes in at is at $59,869. Now, that will fill the inefficiency. It's part of the fair value gap, which I just showed you over here as well. Okay, I've moved off of that chart. But as I just showed you the fair value gap on the low time frame, it lines up with the 50% of this wick. It's a beautiful level. It's also the prior range high. I think that is a zone to bid. That's a zone where you want to be loading up on price action, and you have a super easy invalidation. The bottom of last week's candle, which is the wick low. If you break and hold below that, it's over, right? Well, it's not over. It just means we're going for a deeper correction, and it's no longer bullish. So this will maintain the parabola. It will give it an opportunity to turn the stochastic RSI back towards the upside, and you have full confirmation of that when you break above last week's high, which is coming in right now at 64,653. Once you tag that 50% level, break back above the 65, 66K zone, that's where you're going to see a lot of buying interest come back into the market, because traders will then have their confirmation that the higher low is most likely in, right? You can see each time we've tagged the parabola, we've reacted off that. So this time is no different, right? Expect that you're going to have a little bit of a emotionally tough time over the next 2 weeks holding your longs, because there is going to be chop. You are going to be tested as a bull, but I think ultimately it is going to resolve in a breakout to higher prices. So as mentioned, talking about the YouTube views on various different crypto channels, this being one of them. You can see all of them listed below. You got Bankless, you got 𝗕𝗢𝗕𝗢, Jeremy, Ivan on Tech, you got 𝗕𝗢𝗕𝗢𝗍, Alex Becker, Coin Bureau, Crypto R Us, obviously our channel over here. There's a whole lot of them, a lot of big channels. You're ultimately coming back down into those bear market territories, right? A very, very healthy cool down in alignment with diminishing volume within the market. If you look at the trading volume, let's go back over here, zoom out, quickly bring back the volume. Just give me a second. So let's put that up. All right, let's put the normal volume on. There you go. What's happening with the volume? We spoke about this. We said if you see the volume declining, ultimately, as prices are pulling back into a key support level, what does that mean? Simply, that means that it's a corrective move that's happening on the high time frame. And that's what we're seeing. And we can see that over here, right? Social interest in unison also coming towards the downside. So help to pump this channel, at least, or my show, by smashing the like button. Let's bring some of these guys back in. Now, this would be a deeper correction scenario, which we've outlined. Really, things get mega bullish if you break above that 66K level, because then you are clearing the red 50 moving average on the daily time frame. You're also breaking above the mid-range level. As it currently stands, we're cautiously bullish because you had the swing failure pattern. You broke up, you came into this zone. Now we're looking for a little bit of a higher low within this zone over here, and then the next attempt we said will probably break through that level, and we'll trade towards the top of the range high. And then once we hit that range high level, we can sit and reevaluate. Are we going to get another deviation and come down one more time, or are we just going to expand straight through that level towards higher prices? So why is the next 14 days vitally important? Let me know in the comments. Why do you think the next 14 days is vitally important? I want to see if you guys ultimately are able to pick up on that. I'm going to give it a few seconds to catch up over here. This is your daily time frame. Why are the 14 days very, very important over here? Okay, let's see. Just giving it a few more seconds, guys, for some of the comments to feed through. While I wait for that, I can let you know that there has been a momentum shift on the RSI, which has broken through this area. Okay, I see some of you have got it over here. If you said moon phases, well, ultimately, you would definitely be correct, right? And it's been super, super accurate. If you look at that over there, that is the moon phases, right? We have officially printed a bear moon, and it's been super accurate. Now, it's not necessarily a death sentence. It means there will be a little bit of downside pressure. Emotionally, the market sentiment will begin to shift. But if bulls can defend this higher low, that will be super, super bullish. If they can't, 50K is on the table, and that's going to be a strong area for a bounce, right? So the 14 days, if we can see bulls hold price action up for the next 14 days, and you see something like this, then I expect that the next reclaim of all the significant levels will be very bullish, and that will be your big buying opportunity. And we'll be going into June looking for a slow, steady grind towards the upside and continuation of the bull run. Remember, as history suggests, it doesn't play out one for one, and there's no guarantee of the prior results being what will take place this time, right? So your prior performance is not a guarantee, but it often rhymes. And the rhyme would suggest that post-halving is where you see the most parabolic biggest runs. Now, we're looking for reasons and supporting evidence to suggest whether this would be true. We've seen what's happened with the global liquidity. It is expanding. That's one reason. We know June is when the quantitative tightening really slows down and possibly pivots into quantitative easing. And on top of that, of course, we have the halving cycle, which will already be a couple of weeks behind us. And that's where you start to see, usually it's about 8 to 12 weeks following the halving cycle, where prices start to move up parabolically. So with that being said, look, this is still a choppy range. This is still consolidation. And as long as we don't see major expansion towards the downside and you can defend this low, I think that it becomes a strong buying area over the next 2 weeks. Remember, if you lose that level, you are obviously going to move down into this zone over here, which is going to be the $50,000 to $52,000 level. So as I mentioned on the previous days, what does that mean for you? Well, you can just stagger your orders, right? Place some orders over there. If you do start to lose these levels over here, well, you can defend a little bit of it with some buying action over there. And then your last buy orders will probably be set within this region over here. And those orders get bigger and bigger as you move closer to the stronger levels of support, which is why I made these circles bigger, right? So as price comes down into this zone, there you go. You're looking for a big move from that level. Now, let's continue on over here. If you look at price action on, okay, let's move on. We've covered the range. You can clearly see the range defined over here as well with your liquidity zones, right? The bright yellow levels. If you look at the accumulative volume delta over here on the bottom, it is starting to slow down. So people are not bidding as aggressively long. You currently actually have an almost equal 1-to-1 ratio between shorts and longs, with 208 shorts versus 225 longs right now. Okay, by the way, you have 6 hours left to join Whale School. So if you're watching this 6 hours from now, this is 10 a.m. SAST. If you're watching this at at 4 p.m. SAST, you're too late. 6 hours left to go, guys. It is free to join Whale School. I'll see the rest of you on the live workshop later this evening. Okay, let's continue. Total 3, also same thing. We want to see it hold up. A little bit repetitive based on yesterday's show, but this is the zone to hold. We've covered that. We are prepping our Bybit accounts ready to take trades. We have a little bit of an incentive for you guys as well. If you don't have a Bybit account and you want to follow along, go through to the link in the description below over here. They have an amazing offer right now. It's only going to be for a couple of days that the opportunity is on the table. And what you would do is, to win $100, all you have to do, sign up using this link in the description below, deposit $100, right? Once you've deposited that $100, take a couple of trades, as long as your trading volume is equal to $500, which is very easy to do, by the way. If you have $100 on leverage and you go 5x long, open, close the trade, boom, you just traded $500 in volume. You will get $100 for doing that. You'll get $100 airdropped into your account just for doing that. So use that link in the description below over there. There it is. And then that's it, right? That's it for that part. Let's continue. Okay, Bitcoin dominance trending towards the upside over there. Now, when it comes to ETH has been killing people. Very frustrating, super difficult. Alex Kruger, one of the macro analysts that I personally do trust, I think he has great stuff out there. He says there's no big ETH trade until closer to the US election. Trump edges higher. Higher odds that Gensler will then get the boot. Remember, Gensler is obviously talking against ETH and trying to find a way to label it a security, right? And then there's an increasing odds that you will get an ETF approved, at least for Ethereum. And that will probably cause demand for Ethereum. Right now, I've told you, do not long or do not sell your Bitcoin for Ethereum until such time as this proves to you that it's reclaiming the levels. There's a very good chance that you're going to see ETH BTC once again sweep the lows. again, right? So if you've been trying to play this from Bitcoin into ETH ever since the breakdown level over here, you would have been punished for literally now the equivalent of 191 days, which is super significant, right? More than half the year, the last 6 months, you've been obliterated on this ETH trade. So wait, be patient, be very, very patient. Okay. Don Crypto Trades, he says over here, everything bounced, but it's very clear which sectors are still leading the market. It's AI and meme coins. Those are the sectors. Nothing is coming anything close to it, right? AI and meme coins first to be bid, right? So AI, of course, there's a fundamental narrative behind it. This is, of course, in terms of the IQ scale on the far right side, the smarter people, they look into the protocols and how they're changing the world. And that's when they start to buy those types of things. But when it comes to meme coins, there's no underlying value whatsoever. Why are people still buying meme coins? Why? You let me know in the comments. Why are you guys still buying meme coins? Well, I can go through a pretty lengthy analysis over here. This was an absolutely wonderful tweet by Jason, and I've just highlighted some key points over here of why the meme coin sector has become so big and why it's probably going to continue to expand throughout the rest of this bull run, right? If you look over here, he says it's merely a continuation of a bigger trend that you see across the whole world in developed countries. The future that was promised to the older generations is no longer available to the young. So if you are somebody that's, let's say, 60 years old or older than that, ultimately, we don't have, as the youth, we don't have the same promises. We don't have the same future. We don't have the same opportunities. The world has become a very different place due to the theft of your money through inflation, the hidden taxation, right? And it says over here that my parents' generation's dream was to just have a stable job, buy a house, and raise 2 kids. In your generation, if you're over 60 years old, the probability is quite high that most parts of the world, you probably could have worked or at least had only one of the partners in the relationship working and supporting basically the stay-at-home mom and having kids as well who are well supported. Now, no chance, absolutely no chance that most people can do that. And it says over here, the most common dream when which is in my generation, a millennial, the most common dream when he was a college student was to be a billionaire tech founder, obviously influenced by the hyped movies like The Social Network with Mark Zuckerberg of Facebook, The Wolf of Wall Street, these types of movies that try and instill that culture in us that we should be mega, mega wealthy, right? And ultimately, if you look at why they're bidding on meme coins, it's also due to this, right? The median home price, so the average home price in 1985 is now up 80% after adjusting for inflation, which is absolutely insane. 80% gains, right? Huge gains on the average household price. And the household price to income is more than 2x compared to our grandparents. So he says over here, maybe because 50% of the people are making less than their parents did at the age of 30 compared to 90% of people making less than their parents did at the age of 30 in 1940, right? So if you ultimately you're earning significantly less, way less money with a massively expanding cost on any hard assets, it prices these people out. So they don't have any way to climb that social ladder, right? There's no way to ascend the social ladder. And consequently, they look to the next biggest opportunity, which 2/3 of young adults believe is the stock market, right? It's a great way to build wealth. But the problem is, as he says over here, 90% of young people are way too broke, paying for rising living costs, living on a month-to-month scale on the breadline, struggling, and investing their capital for 7% returns per year is just lackluster and a complete waste of time. And consequently, you're left with 2 choices. Blow your money, spend it like there's no tomorrow because it's going to inflate away to zero anyway, or alternatively, flip the coin. And that's exactly what we're doing, right? Flipping the coin. If you scroll down, yes, it's greed. It's buy coins with no massive supply overhang from VCs. So you have to have a little bit of intelligence and understand the way that these vesting schedules work in a lot of projects. You're going to drown in tokens that VCs got in at a very low price and are dumping on your head. Or Alternatively, you take the chance that it's a rug pull when it comes to a meme coin, but you know that there's no overhang from VCs, right? There's no honeypot. You can verify this. If you look on the DEX tools, you can look for a honeypot. You can also do it on Bird Eye. And consequently, we flip the coin, right? It's craps for the ADHD generation that grew up with brain rot from smartphones. And this is what we're doing. Overnight millionaires, right? Overnight millionaires in the meme coin sector. When you see your friends do it multiple times, you look for the same opportunity. And so the cycle continues. So with that being said, this is why we continue to play this meme coin sector. Phenomenal thread over there. If you enjoyed that, please smash the like button, and also drop a comment over there if you want more of this right curve, left curve type of thinking, where we kind of merge it in the middle over there and we find a way to make serious mullah. So this is why you're seeing the metrics on Solana increase so significantly, right? If you look over here, the Solana native meme coin launching platform, which is this one over here, it's called Pump.Fun, has outperformed Uniswap Labs, which is, of course, one of the biggest dexes for swaps out there. It's also outperformed Base Chain and even Binance Chain, which is very cheap to use. And it's generated more revenue within the past 24 hours than any of these, which is super significant. And I'm just trying to build the case for why, right? This is the reason why. It's craps for the ADHD generation, which are basically looking to take on risk, right? They're at that age now where they know if they play it safe, they're never going to make it, at least if they do the math. The reality is putting their money into an RA account when you have hardly any money to spare and your wealth is being stolen through the hidden taxation called inflation. Well, ultimately, they're better off rolling the dice, and that's exactly what they're doing. And the crypto market is viewed as a sector that's not as, for lack of better word, trashy as, for example, or frowned upon as much as going into an actual casino. It's slightly more respectable, and they believe that there's a little bit more of IQ involved when it comes to playing the crypto sector. Not everybody understands it, and that's why this is why, as you guys say over there, let's quickly pull up this comment. It's shit coins for mains and dessert. Here we go. So this is what we'll be playing, but we understand when to completely diversify, and then we understand when to reconcentrate our portfolio, and that's going to be at the extremities. Are we at the extremities of this cycle? No, we're not. Please stay tuned until the very end. Stay with me until the very, very end of the cycle. I will tell you personally when I'm reconcentrating my entire portfolio. So from a diversified altcoin portfolio and playing these very risky plays, I will tell you when we're going to merge that all back into one thing. So there are smart people, again, that are playing the AI sector, which is now catching up to the meme sector. We'll pay attention to this meta. We'll see if there is an opportunity to start to move there at a later date. Of course, we've been playing we've been playing a few of the meme coins. Let's just quickly go to them. Let's see how the meme coin sector is performing today. So AGIX, we played that one. Fetch AI, I mean, we closed the leverage positions, but we had that one open. We played Ocean as well. We played XAI. So we will update you when we continue to play that sector. But in terms of current trades, one of the biggest trades that we had open was, of course, Solana, we said, and it tagged it to the exact tick. Look at that compared to the prior highs over there. Wicked into that level around $160, which, of course, is resistance. And consequently, you're getting a little bit of a pullback. Now, probably you're going to pull back into the mid-range level, which is going to be around this 140 zone, looking for a little bit of support to be found over there, and then continuation higher. By the way, there's a lot of value if you join Whale Room. So if you go into Whale Room over here, I just want to update you because I did give the guys an update yesterday. I said 4-hour chart on Solana, that could be the top, right? That could be the top. There it is. You can see the wick that comes in there. We were expecting a pullback from there. 15-minute chart shows a lot of untapped liquidity. We might experience a temporary pullback. If so, support will probably be 140 to 145. So there it is. There's the chart. We give another update over here. There it is, playing out, right? Playing out. join Whale if you do want that extra little bit of touch of hand holding where we show you exactly what we're doing. It is dropped in over there, and there it is, right? Prices are currently moving down. We got the support area coming in at about 142, which we're very, very close to, right? That's almost there. So the link is in the description below. If you go through over there, link is in the description below. There it is for Whale Room. Click that link, sign up over there. It's not just me, remember, it will take you through to Whale Room on WAP. Sign up over there. It's mostly on Discord. You can use the Telegram interface if you want as well, but the full experience is going to be on Discord. We do live sessions. You have Mo, you have Chris, you have 𝗕𝗓, you have also a lot of different moderators that you can ask questions if you are confused about trading. It just take your trading to the next level. Everything is in there. All right, let's continue. Altcoin requests. What exactly are we looking at for today? Let me know in the comment section. Let's take a very quick look over here and see what is happening with your guys, the community favorite meme coins being 𝗥𝗓𝗡 and 𝗥𝗚. Is there anything of interest here? Let's have a quick look. All right. Quickly pulling up 𝗥𝗓𝗡 over there, so pushing back towards those range lows, moving into that zone. Again, the next 14 days are probably going to provide great buying opportunities. We have 𝗥𝗚, which deviated the range high. Now I'm expecting support to be found over here at the mid-range level, which is coming in at 0.06. So let's observe how price action moves into this region. I'm expecting something like that. And that should be a next macro high low. And then the next reclaim of the range high, hopefully it defends that level. All right, what else do we have? What else do we have over here? Let's see. I'll have a quick scroll through. I am still waiting for my buys on 𝗕𝗘𝗅 coin. I think I'm going to make them over the next 2 weeks. We are losing that fair value gap, so probably we're going to sweep these lows over here at $1.92. Personally, I haven't allocated anything into this as of yet. I've warned you guys for a number of weeks that I'm interested in getting into this, but I haven't yet taken the positions. Based AI is the other one. It looked a little bit stronger. It looked a little bit stronger over there, bouncing, but at the end of the day, this is still a potential lower high in the making, which means you might sweep a little bit lower. If you do $3.10 is the next zone, thereafter you're looking at about $2. So same thing, timing wise, I'm looking probably at the next 2 weeks to establish some of those positions. All right. Let's just quickly see what's happening over here in terms of Bitcoin on the order book. Is there anything of interest? Let's see, not much, pretty empty, very illiquid. This is in alignment with what we've seen with the drop in open interest. The funding rates have completely reset. The volume has dropped off. So I don't expect any significant orders to jump on the order book over here. If you see those big orders come in around the $60,000 level, I'll monitor trading lights as price moves into that zone. That will be a strong indication if volume is going to come back into the market at 60K. That's going to be big, very, very big, right? Okay. Also, by the way, guys, if you are making your swaps, check Volumint, right? If you go to Mint Swap, the link is in the description below there as well for Volumint and for Mint Swap. Just go through to the link below. There it is. And ultimately, you're getting a 70% reduction on trading fees, right? So compared to using Uniswap, which is, of course, one of the most popular dexes, try out their platform over here, Mint Swap. 70% less. It's a big savings, especially if you're transferring or if you're trying to swap in and out of massive coins. It integrates, of course, with your MetaMask wallet or any other decentralized wallet which you're using. All right, let's go back into the coins over here. Let's just have a very, very quick look at some of the popular sectors. So let's have a look at real world assets, how they're doing, because they have had relative strength. Okay, I want to be careful on this one over here. I am holding quite a substantial position on Mantra, which I've been in for quite a long period of time, massively up. But nevertheless, this is a big swing failure pattern back into the range over there. And I just want to be wary that price manages to get back some support. Otherwise, you could be moving from what was previously a strong trending market into a ranging market and potentially even into distribution, at which point your major support is going to be the yellow box down at 31 to 38 cents. Ondo's the other one that's been super strong. There you have a little bit of a warning sign. Of course, you can be a little bit more conservative on this trend line or parabola, and you can make it fit a little better, but I don't like to move these things around too much. Ultimately, you do have a bit of shift in momentum, right? If you were to use, of course, this trend line over here, just a straight one, then the break of that would show you coming back down to 70 cents. And then that might suggest that you could have distribution to lower prices and maybe come back down to test somewhere around this wick, which is around 42 cents. That will be a significant drawdown, of course, on Ondo. All right, what else do we have over here? Let's have a look at Casper. We still want to allocate more into Casper. Are we going to get our level? Well, maybe over the next 2 weeks. What is our level? We're looking for Casper possibly to sweep into this region over here, which is going to be around 9 cents, right? Just between 0.8 and 0.9, so 8 to 9 cents region. That's going to be a very, very strong demand zone. 𝗏𝗡, how's 𝗏𝗡 doing? Level to level, that's all you have to do. Level to level, you ultimately lost this zone. Did you gain a level or lose a level? Well, here you lost the level, and now you back testing that as resistance, which means the probable move down into the 50 cents level is very, very significant as support. SUI. How's SUI doing? Also coming into support over here. Remember, we spoke about it about a week ago. We said altcoins are going to pull a negative 30% move. So far, SUI 27.42% downside in the making. I told you, Ton, be very, very careful. Be super careful of the complacency bounce. I am worried that the market is currently in a complacency phase, but I do expect the next 2 to 4 weeks to play out the rest of that complacency sell-off, right? So if it is a complacency bounce and we come down, I think the worst will be over within the next 2 to 4 weeks. But ultimately, this is what you're seeing, right? We said you can allocate your first allocation into that zone over there, next allocation around $4 in mid-range, and then your next buys at the $3 zone. And if you miss it and price rallies higher, so be it. You missed it. You can't get every single one. Okay, what else do we have on this list? Let's look at Chainlink, right? I'm bullish on Chainlink for the long term. So if I do get a solid opportunity to get back into Chainlink again, following this trade where we longed it from the bottom over here at $5 all the way up to the top at $18, and everyone said I'm crazy for taking profit. But then look, you got the deviation, right? Let's see if we can get a proper entry into this, it will be good. Our observer's price comes into the zone one more time. And if I see signs of strength coming into the $12.40 zone, I think that could be a place to get a little bit more Chainlink into the long-term portfolio. So with that being said, guys, I think let's cut off over there. Thank you all so much for watching. Remember, 6 hours to go to sign up to Whale School. Also, your $100 bonus is available for Bybit. Use the links in the description below, and I'll see you all on the next video, which is tomorrow. Cheers for now.